Welcome back. Well, the other big story that we are tracking is Rupee going down to a fresh low of 90.73 per dollar. It's down around 0.35% from its Friday's close. To discuss more on the trajectory going ahead, we are now joined by Dhiraj, economist and FX strategist at ANZ Research. Dhiraj, good afternoon. Thank you so much for joining in. Is there any fresh trigger that we are seeing a further fall in the rupee? And also on the trade data that we'll be getting today, are dealers a little nervous ahead of that? If you can list out some of the reasons why we're seeing this continuous fall.
Well, thank you for having me on the show. Look, I think it's more of the same story. We have seen this trend of weakening in the rupee since there has been not much clarity on when the US trade deal would happen, which means that expectations with respect to the movements in the exchange rate have become rather one-sided. Now, what happens in such cases is that importers' hedging demand increases because everybody in the market is, so to speak, expecting the rupee to weaken, while at the same time, exporters remain at bay because they hope they will be able to realize a better price for their dollars later. So I think in such a situation, especially also when you have portfolio outflows continuing, we think that it is natural for the rupee to adjust. And the other contributory factor, of course, is that the Reserve Bank of India is not trying to give any particular direction to the USD-INR exchange rate. In fact, they have been true to their word. They're just smoothing out the volatility. Now, coming to your second question about the trade deficit data, look, I think the trade deficit from a structural perspective has expanded. I mean, we expect it would be in the range of $30 to $35 billion. Of course, not as high as it was in the previous month, about $41.7 billion odd. There will be some correction to it for the underlying factors as festive demand would have lapsed and gold imports would have normalized a bit. But I don't think that particularly is triggering, the move in the rupee to a fresh record low. I think it's a part of the broader adjustment that we should see continue even in the months coming ahead till there is clarity on the US trade deal.
So, Dhiraj, in your sense, what is the level that you are looking at for the rupee in the near term where it could probably settle, and maybe a near-term range as well?
Right. So I think Q1 generally in any calendar year tends to be better for the rupee from a seasonality perspective. So we've pegged rupee at 90 for Q1 2026. Of course, the risk is that USD-INR could be higher than 90, given the current momentum and the current levels. But we do expect some appreciation is likely because of seasonality effects. But by the end of next fiscal year, we had pegged the rupee at 91.5. I'm aware that, those levels could be realized much sooner than we currently project. But I think the rupee weakness has further to go is the broader theme from a medium-term point of view.
Okay, 91.5 in the near term. But Dhiraj, do you think there could be some level at which RBI steps in, they become uncomfortable? Or do you think flexibility is going to be the policy going ahead as well?
Look, at least in the near term, I think flexibility is the way forward. When most of the factors that guide the balance of payments and the currency, therefore, seem to be geared against the rupee, so to speak, I don't think the Reserve Bank of India should try to fight the tide. I mean, of course, the dollar has weakened somewhat since, the last couple of weeks. That gives some elbow room for the RBI to contain the slide of the rupee. But at the same time, we think that the recent intervention pattern of the RBI being a little hands-off than it had been before suggests that they are perhaps open to a weaker rupee. Look, I must highlight that, at this point, the rupee's levels do have welfare consequences. I mean, you're looking at very, very elevated tariffs impacting exports of some very employment-intensive low-tech sectors. So, I mean, a weaker rupee would at least support the earnings for those exporters till we know what tariffs would be after a trade deal happens. So I think that's important right now.
Okay, absolutely. That point is taken. Well, Dhiraj, we also have, the trade deficit data, which is due today. And that might be very critical in terms of assessing how exactly the trajectory of the rupee would be. If it's above $30 billion, the fear is that there could be further currency weakness. Are you looking at that data and what the impact could be in terms of the currency?
Yes, so two data points within the broader foreign trade data are worth noting. The first is, of course, the headline trade deficit. We expect it would be about $33 billion. Of course, in the last few months, the forecast errors have been large because of unexpected outcomes. But $30 to $35 billion, if you compare to India's trade deficit historically, is still very wide. So I think that by itself is a bit of a concerning aspect of the trade data. But within the export data, we would be watching out for what's happening to exports to the US. Now, within the last couple of months, I mean, the September and October data that we had seen an export recession of shipments to the US. Our fear is that that could deepen because in the first 2 months, when the 50% tariffs kicked in, exporters were still trying to retain market share, say by giving discounts or say by rerouting shipments somewhat, or some of those factors, which could have helped in the immediate term, but it would be difficult to sustain those measures over the longer term. So our fear is that, if the elevated tariffs stay in the picture, then the export recession, which is the shipments to the US I'm speaking about, could actually deepen. And if that is the case, the fear of the market with respect to tariffs affecting both cyclical and structural growth in India could very well, acquire a more definite shape, if not anything else. And I think that could itself be also a pressure point for the rupee.
Okay, Dhiraj, thank you so much for joining us today with your insights and the outlook on rupee. It was a pleasure speaking with you. So that's the word coming in from ANZ Research. They could see levels of 91.5 on the rupee in the next year. But with that, we'll do one thing. We'll slip into a short break. As we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.